and welcome to everyone. This is, well, I'm very excited to have Saifedean here with us. I've actually been one of his students earlier this year. He has his own courses actually, and he does his own lectures every week. So I'm very, very happy to have you here. I remember back in spring that one of the lectures or sessions he did was with Michael Saylor. Very cool. I can only recommend everyone to read his books and participate in his courses. So yeah, Saifedean, this stage is yours, and welcome.
Thank you. Thank you so much for having me, Victoria, and for everybody at the conference for organizing. It's a pleasure to be talking to you today. I'm going to be discussing Bitcoin for corporations and presenting the case for why Bitcoin makes sense for corporations today. And this is largely based on my work in my book, The Bitcoin Standard, my first book, as well as the the recent developments in the work of Michael Saylor and what he introduces the corporate strategy for Bitcoin. So I try and present the few main ideas that I think make Bitcoin relevant for corporations today. First of all, to begin with, what is Bitcoin? I like to define Bitcoin as a peer-to-peer software for operating a payment network with its own native currency that is protected from unexpected inflation without having to rely on any trusted third parties. So it's its own payment network that has its own currency that operates independently of any trusted individual party. Its significance lies in two main properties. First, it's the hardest money ever, and second, it's the fastest settling money ever. It's the fastest money that you can settle internationally. For me, those two technological features of Bitcoin are what make it important for corporations. Why? So first, I'm going to talk about the hardness of money, why Bitcoin is the hardest money ever. If we look at what constitutes money, we see that anything can be used as money. But if something is used as money when it is easy to make, people who can make it are going to make more of it, and that's going to cause its price to drop down. And so that's going to make it not useful as money. So if we look at all the things that end up getting used as money, we see that they are all, at the time in which they're used as money, they are all hard to make. So cattle, limestones, metals, seashells, government money, glass beads, cigarettes in prison, all of these things work as money when they're hard to make. When there's something that's harder to make than them, they stop being money. When they become easy to make, they stop being money. So historically, we can understand why gold became money at the end of the 19th century for the whole world, because it was the form of money that was the hardest to make. It was the one that was really the hardest to make in terms of its growing stockpiles on the market. Because gold does not ruin and it doesn't corrode, existing stockpiles are always piling up. So in the gray line here, we see the stockpile of gold. It's always increasing. So annual growth in the stockpile is always roughly constant. Even though every year we make more, we also are making more onto a growing stockpile. So this fact that the stockpile is always rising means that the supply growth rate is always pretty low. So the stock to flow is pretty high, and that's what ends up making gold as money. Now, we look at national currencies, we also see the same thing. If we look at the currencies that continue to witness bad inflation rates and which lose value, which don't hold a lot of value, we see the currencies that have a very fast supply growth rate. Whereas if we look at the best performing currencies, the currencies that maintain their value best over the long term, we see that they have a relatively lower supply growth rate. So if we look here, we see annual monetary supply growth rate in the US or the euro is something in the range of 7 or 5%. But still, it's much higher than gold. And that's why, basically, we can understand why prices go up. If you try and measure prices in gold, because we can't keep increasing the supply of gold at very fast rates, it's always increasing at around 1.5 or 2%, we see that prices are declining. Whereas if we look at prices in terms of dollars and euros and national currencies, we see that prices are constantly rising. And that's, of course, because the supply is increasing. And so now we witness a period in which supply is going up more and more. We also know that government money is the only form of money that can witness sudden and complete collapse in its value, basically, because it's the only one that can, at some point, end up being made at practically zero cost. We've had more than 60 episodes of hyperinflation since the move away from the gold standard in 1914. And most of the time, government money has been highly inflationary, even if it's not in hyperinflation. Basically, government money is built to finance government spending at the expense of savers. It's not built to the benefit of its users for their ability to save into the future. So Bitcoin is basically a solution for this. It's the hardest money we've ever known. It's harder than gold because we see that the supply growth rate for it is constantly declining. We see that the supply of Bitcoin is growing, but it is growing at a declining rate. We're only going to ever have 21 million Bitcoins. And we're going to see the supply of Bitcoin decline, the supply growth rate in the gray line here, we're going to see it decline over time. Currently, it's at around 2% per year. It's going to be closer to 1% in 3 years, and every 4 years is going to drop by half, roughly, until it basically ends up at something around zero in about a century or so. So Bitcoin has appreciated a compound annual growth rate of 200% per year for its first 11 years. And I think now we could, by the end of this year, we're probably going to be around 200% for the first 12 years as well. Bitcoin has never been down in terms of its price on a 4-year time frame because the supply is dropping by half every 4 years. So if the marginal supply is dropping by half, then even constant marginal demand will result in an increase in the price. And that's why we can see that always on a 4-year time horizon, Bitcoin is always up. So we look at the candles, the performance is pretty remarkable. Very few, no assets have done so well for so long ever in history. So in the last 11 years of Bitcoin's operation. And so that's in terms of the hardness. Now, in terms of the speed and the fastest money ever, Bitcoin is the fastest way to achieve final settlement across space of any monetary asset that we have. And Bitcoin transactions add confirmations every 10 minutes. We've not had a single transaction be rolled back after one confirmation in 13 years. And every 10 minutes, you're adding another confirmation. So you're adding another level of security. So security of the transactions continues to increase over time. You can't really compare Bitcoin transactions to consumer payments like credit cards or bank transfers, because these are approval of payments and they settle many days or months later. It's much better to compare it with final settlement transactions, because it is between financial institutions across international borders, because Bitcoin is able to settle these without any counterparty risk, without credit risk, without political risk, without sovereign default risk, without uncertainty about protocol rules. This is really the key thing. So if you want to move money across the world, all other solutions involve relying on financial infrastructure that is carrying a lot of risk and a lot of hidden risk, and on monetary media that also carry a lot of risk. So there's the risk of inflation, and there's the risk of capital controls, and there's the risk of insolvency for financial institutions on the local fiat network. Now, Bitcoin is different from all these traditional financial assets and all alternative digital assets in this regard, because it doesn't have any of those things. And what differentiates it from other digital assets is that Bitcoin has really achieved consensus on protocol rules. Everybody knows that what the Bitcoin's protocol parameters are going to be in the future is going to be very similar to where they are today. Most importantly, everybody knows that the supply is going to remain at 21 million. This is, I think, something that none of the digital other digital assets can claim, because they're nowhere near centralized. They're nowhere near as decentralized as Bitcoin. And so it's very easy to imagine changes in protocol rule, and that's why they perform hard forks regularly, whereas in Bitcoin, we've basically never really had a hard fork. So it's this is, I think, why it's differentiated. So it allows you to achieve global settlement without a single point of failure, without a single critical piece of hardware or infrastructure that is critical for the operation of the network. Not a single individual or organization is critical for the operation of the network. Bitcoin basically cannot be stopped. It's a protocol that's always open to anyone who wants it. Around every 10 minutes, a new block of transaction is released, and it's basically never failed so far. And it's never confirmed a fraudulent transaction on top of all of that. And it has an enormous amount of processing power. And it's the hardest money ever invented It's available for anyone who can receive 2 megabytes of data every 10 minutes. It's voluntary. And now it allows us to perform high values international payments without having to go through governments and central banks, which is a big deal, which is why it's in my book, I call it the alternative to central banks. Bitcoin basically offers us the most advanced technological solution for value storage across time and space. If you care about meeting your obligations for the future and across borders, Bitcoin is your best bet. So that's why it makes sense, in my opinion, to include Bitcoin as part of corporate treasury assets for the long term, because cash, bonds, and gold are all losing value because of inflation or next to inflation. And equity, bonds, and cash have issuer risk, sovereign risk, natural disaster risk, and pandemic risk. Bitcoin comes free from all of that stuff. That's basically my case for Bitcoin. Thank you very much. You can read more about my ideas about Bitcoin in the Bitcoin Standard, which is now available in about 30 languages. The Fiat Standard has just been released, and it's going to soon be out in about 14 languages. Principles of Economics, my textbook, is coming next year in economics, and you can find more details about these and about my courses on saifedean.com. Thank you.